Amazon became world's first publicly traded company to lose close to $1 trillion in market cap, which is no doubt a huge number. Since stock market is on decline these days, the possibility cannot be ruled out that Amazon might lose more shareholder wealth, and don't get me wrong, it might not be the only one. Let's explore in this video latest update about its share price, Amazon losing 1 trillion in market cap, possible reasons behind it, the future outlook about it, and at the end my perspective if this is the right time to buy, sell or just wait. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic. Amazon lost 1 trillion in market cap. If you are new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. Amazon.com became the world's first public traded company that lost 1 trillion in market cap, where the reasons range from fiscal tightening by the Fed, disappointed earnings reported by the company, and the broad stock market, which is facing a downward pressure. Today, on the day of recording, it is trading at $100 a share, but in the past 6 months, it lost close to 5%. Looking at its 1 year performance, Amazon has lost over 40% of its market cap, which is a huge destruction of shareholder wealth. On the other hand, looking at its 5 year performance, it is handsomely up by 77%, which is a decent return. According to an article on Bloomberg, Amazon.com became world's first publicly traded company to lose 1 trillion in market cap, where it shrank from 1.88 trillion to almost $900 billion. Don't get me wrong, this is not the only company that has destroyed shareholder wealth recently. The top 5 US technology companies by revenue has seen nearly 4 trillion in market cap that has disappeared this year. The biggest name in software, Microsoft, has lost close to 50% in its market cap as well. I know it all seems like gloom and doom in stock market these days, where experts are of the opinion that this value destruction in stocks will continue at least in the short term. In today's high inflation environment, the Fed is trying to increase rates to cool down inflation, which is having a negative effect on all assets including stocks. This is the most aggressive pace of fiscal tightening we have seen since 1980s. Hence, the Wall Street believes stocks will remain depressed for longer than expected. There are other contributing factors to this negative sentiment in the markets like labor shortage in the US, impact of 2022 midterm elections, European energy shortage this winter, Russian invasion of Ukraine, and geopolitical tensions because of possible Chinese aggression towards Taiwan. All this leads to slowdown in economic activity, which might help bring down inflation but will have negative impact on companies including Amazon. Stock market valuation is most of the time forward looking, where investors are willing to pay premium or discount based on the future prospects of the underlying asset. In today's rising interest rate environment where there are other geopolitical uncertainties at play, investors don't feel confident enough in the future earning potential of companies, at least in the short term, hence the sell off. Most experts are of the opinion that aggressive Fed will keep stock market down at least for the rest of 2022 or possibly first quarter of 2023, because right now their focus is bringing inflation under control to their 2% target. Think objectively. Don't you think it makes sense for an investor to park their money in bonds where they can now expect a decent return with much lower risk as compared to stock investing? This is another contributing factor for the continued flight of capital from stocks into much safer looking bonds now, hence the stock market is down. I understand these are tough and challenging times for stock investing, and Amazon shareholders are no different. If you look at the returns over a longer period of time between stocks and bonds, stocks always give better returns. But from investment point of view, I am of the opinion that developing the right financial mindset, having a plan in place before taking a financial decision alongside keeping a long-term view is the right way to go. Since it is your hard earned money that we are talking about, so having the ability to do your own stock valuation, understanding your leverage, doing your own risk assessment, etc., are some of the key ingredients required if one needs to be a successful investor, and investing in Amazon stock is no different. But that is me. I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor, so please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.